Hi, this is Lara at Elliott Wave Stock Market with your daily analysis for the S&P 500 for the trading session dated Tuesday 17th of December. I'm recording the video 8:20 p.m. Eastern Standard Time. At the daily chart level, the wave count remains the same, and I'm still expecting at least one more day of downwards movement because this structure, the zigzag for minor wave 2, is incomplete. It needs more downwards movement. The target's been recalculated now at wave degrees on the hourly chart. So far, it's most likely that we haven't had a trend change simply because we have to assume that the trend remains the same until proven otherwise. The trend is your friend. We have absolutely zero confirmation of a trend change at this point here at cycle or intermediate degree. So we'll assume that intermediate wave 5 is incomplete, and within it we've just had minor waves 1 and now nearly 2 complete. When 2 is complete, we should expect an increase in upwards momentum for a third wave. If intermediate wave 5, so far it's lasted 53 days, if it continues to have and has a Fibonacci time duration lasting 89 days, it'll end in early February 2014. So I'll be looking out for that time for it to end as a possible guide. However, those Fibonacci relationships for time simply are not that reliable for the S&P, so that really is a rough guideline only, not particularly reliable. The price point is probably going to be more reliable. So for this idea, we have a first and now a second wave nearly complete, and the second wave can't move beyond the start of the first. Movement below 1646.47 would invalidate this main daily wave count, and at that stage the bearish alternate would be my main wave count. Let's have a look at what's happening with this zigzag on the hourly chart, where it starts here, this point here. So we have an impulse complete down here, a zigzag complete up here, and an impulse to the downside incomplete. It has to subdivide as a 5. We only have 3. It needs more downwards movement to complete the structure. For the S&P, the ratios within zigzags between A and C waves are not as reliable as the ratios between first, third and fifth waves within its impulses. So I'm recalculating the target using the wave degrees of this impulse of minute wave C, especially because there's no Fibonacci ratio between minuet waves 1 and 3. That means it's very likely that we shall see a ratio for the fifth wave and either the third or first. At 1765, the fifth wave would reach equality in length with the third wave. That would bring minute wave C slightly below the end of minute wave A, avoiding a truncation, and that would probably bring downwards movement to end in the midline of this parallel channel, which is also for the S&P a reasonably common place for C waves of its zigzags to end. While minor wave 2 is incomplete, the B wave, if it were to continue further sideways, and that is a possibility because we only have this 3 down, if it were to continue further sideways as a double combination, contracting triangle, or higher as a double zigzag, it can't move beyond the start of A above 1811.52. As soon as we have the fifth wave down, which is probably going to be over tomorrow, then the invalidation point is removed and we will expect a trend change and a third wave up. This is the 5-minute chart, just very quickly showing the structure of minute C. We have an impulse for 1, an expanded flap for 2, an impulse for 3 with no ratio to 1, a zigzag for 4. We've got nice alternation between 2 and 4. The fifth wave quite simply can't be over there, and that would be a huge truncation. We need to see more downwards movement for the fifth wave to complete as a 5-wave structure. This is the bearish daily alternate, and the only difference between this and the main wave count is I've moved the degree of labelling within intermediate wave 5 all up 1 degree. For this idea, we may have seen a trend change a few days ago up here at cycle degree, but it's an absolutely enormous trend change. We need to wait for confirmation with price movement below 1646.47 in order to have confidence in this idea. At supercycle degree, the structure is an expanded flat, which usually has a C wave, which is 1.618 the length of the A wave. For this one, that's 1,397 points in length, which would see cycle wave C end substantially below the end of cycle wave A, below 666.79. So it's an enormous trend change, and we need to wait for some confirmation of it. This is the bullish daily alternate wave count. It differs from the main wave count at the monthly chart level. It sees the correction over at 666.79, and that's where a new bull market began. Within the new bull market, we have primary waves 1 and 2 complete, and within primary wave 3, intermediate wave 1 would most likely be complete here. This one, at this stage, expects more downwards movement for a big second wave correction, which is very likely to break through support at the lower edge of this blue channel, because this is the channel around intermediate wave 1. I've drawn it using Elliott's first technique. Second waves should break through the channel containing the first wave, but intermediate wave 2 should not break below support at the lower edge of the big maroon channel on the monthly chart, because the second wave of a lower degree should not breach the lower edge of an acceleration channel around the first and second waves 1 degree higher. It should find support there. If price breaches the lower edge of that maroon channel, this wave count would technically be still valid, but it would be extremely unlikely, and then I would discard it. So I was expecting downwards movement for Tuesday, which is exactly what we've got. We've got more structure now within that zigzag. I've refined the target. I'm expecting at least one more day of downwards movement before the second wave correction could be considered complete. That's all for me today with your S&P analysis, and I hope that all our members are having a most fabulous day.